Okay, we'll go ahead and get started. Thanks for being here. So you were saying, Richard, that your CPA is in favor of you not buying through an LLC. We'll just start with
Right.
that.
Yeah. So at this point, with what I'm doing, and what I was saying is, I think it's particular to your situation. I know it that a lot of people just right off the bat think, "Oh, I need to go get an LLC," and they might do that on their own without consulting either their CPA or an attorney
Okay.
to actually see what what benefits come from that and what liabilities come from that, and if they actually have anything they need to be protected from. you know
Right.
so so I guess when I first started out, I was under the impression that I needed to do that there was going to be this, and flipping properties and investing in things, that there was going to be this big liability associated with it. And so they were able to set me straight on that, whether, in my particular situation, if I had that or didn't have it, and how the the tax implications might affect that decision, and whether you can, the average person can just claim any proceeds or anything
Hmm.
like that on their personal return.
Right.
You don't have to have uh, another way to do that. And I think that's what a lot of people, they initially think, oh, if I have some type of business going, regardless of what it is or regardless of liability, that I have to run that through something separate. And
So you're
that's
you're saying that a lot of people just assume that there's some type of magical tax advantage to operating out of an LLC, but that's not
right,
necessarily the case.
right, right. Or
Well,
that they don't really have liability in what they're doing that they need to be protected from.
so, Albert, you may be able to speak to this a lot because, you know, how about my CPAs for various businesses and purchasing real estate have recommended LLC, not necessarily for the tax advantage, which I think is interesting that you bring that up, but the L is limited liability. If somebody, if I have a contractor that's working on the roof and they fall off and hurt themselves, um, they can go after the company, the LLC, but not my personal assets, which that's up for debate anyways. But that's just kind of what we've always been told. What do you think?
Here we go. I think how I look at it is, I mean, there's because there's different types of LLCs. I think we're going to talk about some of those today. And so I think for me, it's more of a liability, protection. Um,
Hmm.
I don't think it's, a, a unpenetrable defense. Like there's definitely ways that if someone wants to see you, there's ways that they can try to get around that.
Right.
Um, and I think typically it's kind of the way I look at it is we have our rental properties in LLCs to protect, ourselves from renters who might, slip and fall, or maybe there's a crack in the sidewalk or something, or the driveway, and they trip and fall, and they try to come back and say, it was through our negligence
Yeah.
as to why that happened, right? So I know we're going to kind of dig into that here in a minute, but that's how I look at LLCs, and then like S corps and C corps and things like that, for different types of income, whether it's
Right.
passive or active. You can get taxed at different rates. So instead of like an LLC, it's just more of a pass-through tax. Like
Hmm.
you pay the same income tax that you pay as an individual, right? With an S corp, it's capped right now at 15%. So that's kind of how we have our structure. I know we're going to talk about that in a minute, but
Yeah. Well,
that,
welcome.
that
We
that's how
are
I look at the tax benefits of it.
right. I probably don't think about the tax benefits as much as the liability factor and the anonymity. I
Mhm.
can't talk today. Well, we are on, and this is week 11 of the REI 101 show. We are we're excited to be here. We are wrapping up Q2, getting prepared for some really exciting content in Q3. Albert, how's your week going? Any interesting deals, any interesting finds, or what have you
Well,
learned this week?
I'm a grandfather, so that's awesome.
Congratulations. I saw that. Congratulations.
Thanks a lot, man. Yeah, that was really cool. Yesterday we celebrated that. I think right now what we're doing, we're about 2 or 3 weeks away from our ground up construction properties from being done. So that's pretty
Yeah,
awesome. Really excited about that. Um, we did another big price drop on our Heights flip that we haven't been able to sell. We did a big 20K price drop there. So we have a couple back-to-back open houses this weekend.
yeah.
Really trying to get that moving and off the books there. I went and looked at a fourplex last week that was off market, came from a referral, gave them a verbal
Nice.
offer, and I've been following up with them, but they've been ghosting me. So,
Oh man.
uh, yeah, it's over by U of H. Really good area. It's a small fourplex. Well, it's a duplex now, but it would have to be a fourplex again. It's kind of small,
Nice.
but it has a lot of potential. So I'm gonna keep following up with that family to just see if they have a counter offer, maybe,
Yeah.
see how that goes. But yeah, man, it's going pretty good, and I'm working on some classes. We're gonna be giving some free classes at one space in Houston. That's our real estate themed
Yeah.
co-working space in
Tell
Edo.
tell us more about that. How do we
Yeah,
get more info
so
about that?
yeah. So it's a co-working space, but it's more of a grow working space. It's more of a collaborative space where real estate professionals, so that can be agents, investors, architects, designers, title,
Hmm.
contractors, they can work out of that space. They need to office out of the space, but also will be available, like our mentorship program, our coaches, myself included, will be available to answer questions. For instance, if there's an investor that has a question about the 70% rule or wants us to help
Right.
them underwrite a deal, right? Will be available there. And then we're going to be giving free classes weekly out of there in the evenings, kind of
Very
similar to what
cool.
we're doing here, but
Yeah.
just maybe a little bit more in depth and in person.
Good. Yeah. Yeah. Free education. You can't beat that, right?
No.
And on top of the education, remember education comes first, and then networking is second. It's a great opportunity to meet some really incredible people, and a great opportunity to meet some incredible people in the space as well.
100%. Yeah, for sure.
Well, very cool. So we're talking about tax liabilities, LLCs. Maybe we'll hit on a little bit of on bookkeeping, but I see some people on the call. Here's what I need from everybody. First of all, Albert, Albert's not an attorney or a bookkeeper, and I hate to break your heart, but neither am I. Or a CPA. He's not a CPA. I'm not a CPA. So we're gonna what our goal is of this show is just to cover some different topics, give investors and anyone in the real estate area things to think about, things that you ought to know, topics to discuss with your CPA. Maybe you may find that you need an attorney. You may find that you don't need an attorney. If you have an attorney, what are you looking for? What's necessary? So we're going to talk about LSCs. We're going to talk about tax tax advantages, ways that we can build wealth, put more money in our pocket, um, and then discussion points with your attorney CPA. But really, what we want to know is I want to know what is it that you want to know because this is going to be just a drive-by fire hydrant episode. We're going to hit on a lot of stuff. We're not going to have time to really camp on anything, but Albert and I are planning on coming back and doing an entire series on tax advantages, tax tips, bookkeeping tips, and things like that. Anything else, Albert, before we get started?
That's good. I'm ready to dive in.
So, first question, and I get asked this a lot: do I need an LLC? And that's what Richard jumped on. Um, I would say probably. Of course, ask your CPA, ask your your bookkeeper. There's a lot that goes into that. You were talking about different types of LLCs. I have a few of them. Some of them I use, some of them are just kind of on hold. Um, Tell us about what you do in your business and the reason your reason or thought behind owning an LLC, or really what's the purpose in your world?
Yeah, I think like especially for newbies, I wouldn't get hung up on some of these things that we talk about, like LLC, 1031 exchanges and hiring a bookkeeper. Like your goal really is to get your first deal under your belt. And that was our
Hmm.
goal in the beginning. We just wanted to get our first deal. So our first property wasn't in an LLC. But we knew that we probably were going to need one because we knew that we were going to acquire more properties. And so what we were taught was that LLC provides a level of protection of that property to kind of separate that property from like your personal
Right,
property, your personal finances, and there's specific rules to make sure that separation is stays intact. Like you can't take your business card and go pay your personal home's light bill with it, right? They kind of see like you don't want to commingle any of those funds, right? You don't want to have rent checks deposited into your personal account and then transferred to your business account or somewhere else. You're
right,
just kind of commingling these things. So that can kind of really negate I think the power that an LLC can have in protection. It can just wipe that away. So that's like one thing that you really have to be diligent about. But we primarily set them up for protection, for liability protection
right,
in case, a renter, we are talking about a minute ago, if a renter, trips over a cracked piece of concrete and they try to say it was your fault, you're going to have insurance as well on the property.
right.
And we're not really talking too much about insurance on this episode, but like umbrella insurance, kind of
Hmm.
gives you a wider range of liability insurance over multiple properties. But we started out with an LLC, Austin, primarily for protection, not really for the tax advantages because there weren't really any.
Yeah,
Because we were just that was always just a pass through tax return. So we
yeah.
filed that LLC along with our personal taxes is all on one. As we started to flip more, we had like more quick returns, and we have the potential for short-term capital gains and things like that. And then we also started to property manage for other people,
Hmm.
so now we had like this income coming in. Instead of paying my regular income tax, and then you have small business income tax, you have a bunch of these income taxes that can pile up. Our CPA that we worked with recommended creating something called an S corp.
Yeah,
So the S corp, like all of our flip properties go through that S corp. All of our property management income goes through that S corp, and those income taxes are capped right now at 15%.
right,
So, that kind of helps manage that tax burden as well. And that's a separate tax return. It's also due a month earlier than your personal income tax. So, like we had to file that on March 15th instead of
right.
April.
Got it.
So,
Yeah,
and that's how we're set up, right? Again, you said it, I'm not a tax professional. I'm not giving you legal advice. This is really just for educational, informational purposes only. So you can take what I have. It's really just to kind of plant some seeds. So you can now reach out and, find a qualified CPA or real estate attorney that can help you with this.
yeah, absolutely. So three reasons I would. So the limited liability. That's from what I understand, is probably the most important part of it. We have a lot of clients that really take advantage of the anonymity,
Mhm.
because we have people who have family and they don't want their family to know that they have millions of dollars tied up in real estate,
Mhm. Mhm.
or they have, I don't know, maybe they have, different banks lending on it. There's all different reasons why they
Mhm.
they just want to kind of keep things quiet. Um, Probably a bigger advantage of that I've seen is that it allows for flexibility within partnerships. So if you're someone that thinks that you may take on a partner at some point down the road, or if you're going in together with a partner, I would probably think this would be the best route to go. I don't think a partnership with two people personally on it, I don't think that's a good idea. But I think those are probably three. Then a couple of small things I've thought about. Having that LLC kind of opens a few other doors. For instance, if you're wanting to get a business checking account, which we seriously recommend using separate checking accounts for your businesses. However, the checking account for your business may not have to be a business checking account. I don't know if that makes sense. Sometimes you can use a personal account for a business. Just you just want some type of checking account separate from your personal to operate the business out of.
Yeah.
And then one thing we mentioned that I learned about this last year was a series LLC.
Mhm.
So this is a type of LLC. If you're planning on buying multiple properties in the same year, a series, that's a good option because you may have like, you know, Austin Jones Unlimited or Austin Jones Inc. or whatever. And then underneath that, you may have 123 Main Street LLC, or you may have, 135 Walker Street LLC. And you may have different kind of sub LLCs underneath that. Benefit of doing something like that, if you are planning on purchasing or owning multiple properties, it kind of keeps everything a little bit separate, but also may save you money with when it comes to the bookkeeping and the accounting side because everything is still going to be together.
Yeah.
Um, so with somebody with a whole portfolio of properties, when it comes to bookkeeping, what you want to see is I want to be able to evaluate the performance of each individual asset on paper. Most people probably are using QuickBooks or QuickBooks Online. We can talk about bookkeeping too. So you want to be able to see how each asset is performing, and then you want to be able to see how everything's performing together. And so you can kind of identify, I have an appointment with the client this week. He's looking at each one of his assets and he's considering offloading his lowest performing assets to try to improve his portfolio.
Mhm.
Anything else with that as far as LLCs? Any questions? Type them in the chat box or come off mute. I want to hear what your thoughts are.
I think that's a good start.
Okay. So yeah, we put professional credibility. Sometimes this is helpful when it comes to getting if you're
I mean, you
getting
get
loans.
business lines of credit,
Yeah, you'll need
depending on
that.
how long they look at how long your LLC. So this is why it's also good not to wait too long in your real estate journey because they also look back at like the age of your LLC. I know, and this is kind of a sidebar, there are companies that help you get business lines of credit and they actually will rent to you a seasoned LLC.
Oh,
Basically, you
really?
use a seasoned LLC to qualify for larger lines of credit. There are companies that provide this as a service, you
That's new
know.
information.
Yeah,
So
it's
are
pretty
you on
much.
the LLC as an owner on paper for a temporary? Like, what do you mean
Yeah,
rent? Are you the owner of that LLC for a period?
I don't know like all the details. We did talk to one individual probably about 6 months ago that was offering this as a service, and I wasn't real. I thought it was interesting. I didn't know that existed, but I didn't really ask him any more details because their fees are pretty high. Like they want 10% of whatever you get
Oh,
approved for. So, I mean, I thought it was pretty high, but for some people, if they want $200,000, they're willing to pay 20K to get it. I'm like, okay, that's a little bit outside my taste. So,
I guess
uh,
everybody has a creative way to make money. Who would have known that was an option right there?
yeah, yeah. So Clarissa asks, "What's a C corp? How do you use it?"
See, so traditional corporate structure, I mean, they're pretty similar. Um,
There's
I don't.
definitely different tax implications with a C corp. I think as far as like the income tax as well for C corp is definitely different. I don't have a lot of experience with it. I just have more experience with what we're using, which is an S corp and an LLC uh, structure.
I I know that here I got a thing for you. So the LLC is you are taxed as personal income on the LLC, not as a C corp. There are some benefits of doing a C corp, but most real estate investors don't do that. Um,
There's a
there's
lot more
more.
rules too. Like, one of the things too, like when you're researching these LLCs, especially when you get from like just the traditional LLC or sole proprietorship and you get into S corp and C corp, again, talking to your CPA, they'll be able to explain this to you, but there are specific activities that you have to do every year to maintain that S corp. Like for instance, I have to document annual meetings of our shareholders, which is me and Julia, because we're 50-50 in,
Mhm.
in, in the S corp. If I want to claim mileage, like on my taxes, I have to show mileage reimbursement to me as an employee of the S Corp in order to keep that designation. I also have to get paid that's how I actually take a salary from my S Corp in order to keep that S Corp designation. If you don't do some of these things throughout the year, the
Hmm.
IRS can come and actually just say your S Corp is dormant, it doesn't exist. Like you're not using it the right way. And they can like basically stop it, or you have to do some things to get it back up. That and those rules I think become a little bit more strict when you implement a C Corp.
Right.
So
Later on in the year, we will be going into more detail about this. We will be planning on having a real estate attorney and a CPA on as a guest.
yeah.
So please stay tuned to that. Those are good questions. But as for now, probably I'll talk to your CPA, but I would say that's probably not what you're going to see uh, normally, especially at the beginning stages of investing in real estate. So. Anything else about LLCs, S corps? So we'll talk about LLCs, S corps, partnerships, C corps, those type of things, different structures, entity structures, um, and things like that. So let's talk about tax advantages.
Mhm.
One of the greatest things about real estate are some huge tax advantages. If you're
Yeah.
smart, you can take
Yeah.
advantage of them. Um, Depreciation. Um, You want to talk about that? Losing
Yeah.
money on paper, and it's just basically a way of getting taxed less on things that may or may not be losing value over a period of time.
Yeah, I think like depreciation and we can talk about cost segregation and bonus depreciation. I think to the inexperienced investor and they don't understand those concepts, they're leaving a ton of money on the
Hmm.
table,
Yeah.
especially if they are not only investing in real estate, but let's say they still have their W-2, their 9 to 5 job. Let's say they're a high income earner, so
Yeah.
into the six figures, or maybe they have a spouse that's a high income earner. And so they're paying a lot of federal income tax already,
Right.
on that income, right? Especially as a combined income family,
Yeah.
so our household, they're building that. I mean, they're paying a lot of federal income tax. The way you can actually get a lot of that stuff back, or reduce your tax liability for the federal income tax, is by owning real estate and
Hmm.
taking this bonus or accelerated depreciation, this bonus depreciation.
Right.
I think single family homes, per the IRS, they depreciate over 27 and a half years. So what they do is they look at the value of the structure itself, not the land, because the land doesn't depreciate, but they look at the value of the structure. Let's say it's $200,000
Hmm.
and
Hmm.
the land is 50, so the overall value is 250, but they take that $200,000 and they'll just depreciate that over 27 and a half years. So if you cut that into 27 and a half equal parts, you can take that as a credit, right, to your
Right.
your income tax. Okay. Well, they have this thing called the bonus depreciation where you do something called a cost segregation study. And because there's certain parts of your house that don't depreciate as quickly as others. Like for instance, the flooring, the windows, the appliances, the roof, foundation, electrical, plumbing, all those things depreciate at different rates.
Okay.
And you do something called a cost segregation study. And what the federal government will allow you to do, the IRS will allow you to do, is they'll allow you to accelerate, like take all of that depreciation of, let's say, the windows or whatever it is. Let's say some things depreciate over 5 years, like your
Hmm.
appliances or something like that. They'll allow you to take all that depreciation in the first 5 years instead
Like
of
we would have to
spreading
go
that
through
out.
like a whole list of each item and say, okay, your
Yes.
lights are going to
Yeah.
depreciate over X, your windows,
Exactly.
and that
Exactly.
speeding that up. What was that? That's the cost segregation. Is
Cost
just
segregation and bonus depreciation. And that was actually been stepped down over the last couple of years. They used to let you take 100% of that bonus depreciation year
yeah.
one, but that's been stepped down. I think it's at 40% now. But this new tax bill that's making its way through the government, they're trying to reinstate that back
Right.
up to 100% of bonus depreciation. What's really great about that is, though, and I'll mention it again because it's worth saying twice, is if you're a high income earner in your home or your spouse is, it can actually offset a lot of those federal income
Yeah.
taxes. And
I
that's
hadn't
what's
thought
really
about
great.
that. That's an interesting point because it's a taxed refund off of your total annual income, which
Right. Yeah,
includes
exactly. And then
what
the
you get
same
from your
thing
job.
too, like there's some other loopholes. Let's say you own some short-term rental properties, vacation rental properties,
Hmm.
and let's say now you've quit your job, Austin, and you manage your properties, just you're self-manage your properties. You don't pay a property
Right.
manager, you self-manage. So you put in the majority of the work into your
Hmm.
properties. No one else does, basically.
Right.
Then there's some loopholes where you can now also take some more tax write-offs from that function and apply that to your spouse's income if they have a high income as well. So
That's good.
those are some things. I don't necessarily want to get too far in the weeds on those, but those are other ways you can leverage real estate that you own. Like we talked
So
about
here
flipping
the
and wholesaling and stuff like that before,
right.
but these are rental properties that you own.
So the takeaway is put the words word wall. If you have a word wall, depreciation, cost segregation, bonus depreciation, write-offs. Put those put those on your list, and when you are interviewing that CPA, just bring those. How much is your average client? Well, first of all, are they working with real estate investors? And you can ask them like, how much can I expect to save using depreciation, cost segregation? And then let's talk about 1031 exchanges because this is an incredibly powerful tool that I, I know for a fact there are a lot of people that own real estate that do not take advantage of this. And this is like kind of it works kind of like a Roth IRA. Your taxes are deferred somewhere in the future. Um, so so you can buy something, like small house, hold it for a few years. If you sell that house for a profit, that's a gain. That's a capital gain. Okay. That's not the same as your income that you make. So, I mean, remember, like we're making money on real estate multiple ways. Real estate has a tendency to cash flow. That's income. And then when you sell it, you're going to sell it for more than you bought it for. That's a gain. That's a capital gain.
Appreciation.
Well,
Mhm.
yeah, that's on your appreciation. Real estate averages 4 to 5% a year in appreciation. So you may cash flow 5%, but you're earning a lot. And that may sound like a lot, but it's a lot more than you think because when you have appreciation, if you buy, like a $200,000 single family home, your investment's not $200,000. Your appreciation's 5% of the 200,000. So what is that? $10,000, right? So it
Yeah.
appreciates $10,000 a year, but your investment was only what
40.
20 forty
Yeah.
thousand dollars.
That's a
So
$25.
that's a 25% return on your investment just in appreciation. That's a big chunk of money that you're making off of that real estate. And the government would love so much to tax you on every single penny. But there's a loophole. It's called the 1031 exchange. Ask your CPA about it. Instead of putting that money to your pocket or going to Vegas and blowing it all, you can just put that money, that $250,000 or $300,000. Now you got more money and move it into a bigger asset or move it into small, little tiny houses or, different real estate. And then those capital gains, you're not going to get taxed on. So that's a huge, huge advantage, huge strategy of the 1031 exchange. And there's people they'll buy properties earlier in their real estate investing career, just keep deferring it into the future and never actually have to pay a tax on those capital gains.
Hmm. Yep.
Anything else?
No, that's good. Yeah, it's a delay of taxes. I just want to make sure people remember that it doesn't actually go away until the very end. And we're not going to get in the weeds there, but we talked about it before. You can have revocable trusts. You can have your property in a revocable trust, and then whenever you pass away, you can bequeath that trust to your heirs, and
Yeah,
then they are only taxed at. Then it looks at the current value of all of that real estate in that trust, and that is the actual starting point. It gets stepped up to that. So if you bought all
yeah,
this property and you let's say you had $1 million in gains in appreciation as you traded up, for instance, you put that into trust, and when you die, the clock starts on the million, not on the
right.
200,000 that you started 20 years ago. So
So
that's
you
something we can
you
work on too.
you bring up another interesting. So let's talk about trust first for another second, because this is another really interesting um, tax advantage. It's kind of similar in some ways to like an LLC, um, but it can be operated by like somebody else. This is a very useful tool if someone owns a lot of real estate and they pass away. If they own that real estate in their name, the probate process can get kind of complicated. But one way that you can kind of simplify that whole process and even exchange control. You can assign control of a portfolio real estate asset to somebody else, even while the owner is still living.
Mhm.
A trust is the way to go. So if I own, 10 properties and it's in a trust, I can just basically say my son Jonah is going to take that trust, and when I pass away, he's just going to just he just walks in like he owns the place because he does at that point. He doesn't have to go through probate. It doesn't have to go through an attorney. It simplifies the process. But what you're mentioning is like a combination of the 1031 exchange into a trust, because you can actually own all your property in a trust and then use the trust to have 1031 exchanges in a trust. I know that might get start getting kind of in the weeds, but it's a
Yeah.
huge if you understand, like, here's the takeaway. Understand trust, understand how the 1031 exchanges work. If your goal is to leave real estate to your family when you leave this world, you need to do a trust. I would just
Yeah.
say that. Talk with your
Yeah.
CPA.
So we said CPA and also like estate planning
Yeah,
companies. And that might be different than your CPA. So don't
yeah,
work with your CPA though. So estate planning companies will be able to really dive into this. Honestly, it's not an inexpensive endeavor, but it's an expense that's worth it in the
yeah.
beginning. It may sound expensive just depending on how many properties you're kind of starting with. Sometimes it sounds complicated, but I think it's definitely worth the expense to get it done, sooner than later because you just never know what's going to happen. So,
And also, like with the 1031 exchange, there are 1031 exchange specialists. We will probably have several episodes just talking about 1031 exchanges because that tool is so incredibly powerful. But just
yes.
keep in mind, like if you sell a property and you decide to do a 1031 exchange, there are rules that you have to follow. There's a timeline you have to follow. You have to purchase
Mm.
another property. So,
Yeah.
um, something good to learn about. So we understand the difference between ordinary income versus long-term income, long-term gains. That's capital gain. So we
Mhm.
understand the difference between capital gains and just ordinary income. What
Yep.
about write-offs and deductions? Because I think this is, I would say the easiest way in my mind to really keep track of this is number one, uh, get a bookkeeper. Make sure you're keeping good books. I think that's one of the biggest mistakes that um, real estate investors make is they don't track their income and expenses well. And it's such a powerful habit. Not only is just good record keeping it's going to increase the value of your real estate just by having a good income and loss statement. And then, but having that separate, believe it or not, I've worked with property owners of multi-million dollar assets, and it'll say concrete and lumber and utilities next to taking my wife out for dinner, next to Comcast and Netflix, and it's commingled is
Yeah.
basically what you're doing. You're mixing business. So separate the business from the personal. That's just always do that. But the being keeping a good bookkeeping record, it's really easy to identify write-offs and deductions. So what is that? What is a deduction? That's another word wall word for you.
Yeah. I mean, like there's certain expenses that the IRS allows you to, basically deduct from your profit.
Yeah.
like repairs, insurance, gas mileage, legal fees, things like that. We started just with a simple spreadsheet. So again, it doesn't have to be complicated. And a lot of people kind of overcomplicate it, and then
Hmm.
they get behind on tracking those expenses, and then it's
Yeah.
kind of like a big snowball now at that
Yeah.
point that they have to try to attack. But just start with a simple spreadsheet. I started with a simple spreadsheet, and it had a tab per property. I'm just anal, man. I'm tracking every little expense, permits, utilities. Every time we got the lawn mowed, obviously repairs, maintenance, things like that we apply to the property. And kind of going back to what you're saying was tracking it per property allows you to identify, low performing assets. I think when you're just getting started, it's easy to identify, low performing assets. But as you acquire more and more properties, maybe you want to just have hundreds of units and things like that. You really have to have a good way to track
Yeah.
that. Quarterly, monthly, however.
Hmm.
When we hired a new CPA, he moved us into QuickBooks Online,
Yeah.
and that was pretty much game changer. I still do it both ways. I still have it in my spreadsheet and I have it in QuickBooks. But it allows you to work more closely with your CPA because your
Yeah.
CPA is not going to want to look at a spreadsheet. That's just really, really hard and tedious for them to get through. So putting this in QuickBooks where everything is, aligned and connected, then that's I would say you want to make a goal to get there with that. But
Yeah.
those deductions, a lot of those you can actually apply, and basically what it does is it reduces the amount of profit that you have to pay tax on.
Right.
That's what those deductions do, because that profit is kind of like your income, you know?
Right. Saves you money with the taxes. So
Yeah,
keeping a good record of it's going to make a big difference.
yeah.
Did you want to talk about QBI deduction pass-through entities? We can
No.
pass on that. And then anything else with that? We hit on trusts right there.
No,
We
I'm
good
good.
there?
I really want to get into this next one because I think like, the people that are on and the people that are going to be watching later, I'm glad you added this. What we're going to talk about is these questions you want to ask when you're talking to a CPA or you're talking to a real estate attorney. These are really good. Austin, I'd like to
Yeah.
jump into some of those.
So to go back to Clarissa's question, when you're meeting with your CPA, just ask them what is the best structure for my goals?
Yeah.
They may tell you something totally different than what we're saying. Listen to them. Um, I would probably recommend going through a number of CPAs over my life. If you don't have a great CPA, I would interview a few. And these are some questions, and we'll send these notes out. We'll email these notes out. But number one, what is the best structure for my goals? Is it an LLC? Is it a C corp, S corp, or do
I,
I even need to do anything?
can I go back one question then?
Yeah,
Like
yeah.
for me, the first question I'm asking a CPA is, do you own real estate? Tell me about the real estate you own. Because I think that when you're working with a CPA who actually owns real estate, and they're doing their books for their real
Hmm.
estate, I feel like they're gonna have more real world like knowledge
Yeah,
of tax laws, because they're implementing them to the highest and best to their ability for their properties.
right.
You know what I mean? So that's why like the CPA that we hire, he owns multiple properties, multiple businesses. He employs his kids. Like
Yeah.
he's taking advantage of every tax advantage possible.
He's thinking about that stuff constantly, like it's
Yeah,
second
yeah.
nature.
So that I think is kind of like first question. Not a deal breaker, right? It's not a deal breaker, but I think it's important that you know that because
Yeah,
you may be missing out on some of these tax advantages,
yeah,
if you're working with a CPA who may be focused on like corporate type,
yeah.
taxes. You know
Totally
what I
different.
mean? Or like maybe they do books for a bunch of liquor stores or convenience stores or things like
Yeah,
that. Your business structure is going to be different. So
yeah,
I would start with
absolutely.
that question. Yeah.
Yeah. So do you have experience in real estate? Do you own real estate? Are you working with any other clients that are in real estate?
Yeah.
That's a good start. So what's the best structure for my goals? Then how should I track expenses? I use an app called TripLog. It's amazing. There's no like we live in such a time. And the technological advances in the last 48 hours have been ridiculous. Like the stuff that is happening with AI. There's so many powerful automation tools. Like my trip tracker just automatically starts logging it as soon as my phone starts going more than 5 miles an hour, it starts logging my miles. And it
Mm,
knows based on where I'm going, if it's business, if it's volunteer, if it's personal or something like that. So how should I track my expenses? Um, Cost segregation.
yeah.
When is it worth it? When is it not worth it? Um, I think that's a good question because you want to understand, like how beneficial is it? Sometimes it doesn't make a big difference if they're smaller items.
Right. Yeah. Depending on the cost for the actual cost seg study. Some of these studies you can do online too, and you kind of have to be careful with that as well. Like we use an online service that's kind of like like self-managed,
Yeah,
but with that they put a disclaimer too, like all these services are relatively new. And so
yeah,
the IRS, probably hasn't really dug into what these services actually provide, and if they are not necessarily illegitimate, but are they doing things the right way,
right.
So you kind of have to be careful there too. But there are cost segregation companies where they actually send an engineer out to your property. They inspect the property, they ask you a ton of questions, and then they come back like a few weeks later with the study. Those are a
Yeah,
little bit more expensive. But yeah, you're
that's
right.
good.
Like, when does it make sense?
When does it make sense? Can I pay my kids or spouse through the business? Everybody sends me videos from TikTok about doing this. Um, I would say I know you can. I know there are tax benefits to doing that. With a lot of these fun tax benefits that are being offered, I would probably coach somebody to not go too far out of your way to take advantage of these because um, sometimes we end up saving less money and end up costing us money by doing stuff. So it's just something to think about, though. But sometimes you can take a portion of those profits and put it in, your kid's college fund and not have to pay taxes on that. And there's different things you could do with that.
Mhm.
Oh, this is a good one. Multi-state filings. If you are planning or if you already are investing in multiple states, talk to your CPA about that. There are some really interesting real estate investing opportunities in other countries that we're connected with, and we would love to talk about international real estate investing at some point. But it could end up, you know, not being something that your CPA can do well. So talk to them about that.
Mhm.
And then always, number seven, what should I be doing now to prepare for next year's taxes?
Yep.
For me, I'm so scatterbrained, ADHD. I work best through a checklist system, and I have ongoing checklists. I have a calendar. I have it posted. Um, Not too complicated, but you just got to keep on that checklist system to keep up with what
Yeah,
you're
and then
doing.
having your CPA, right? This qualified person that's kind of watching your back, so to speak,
Yeah,
and preparing you for next year's taxes.
yeah, yeah,
That's why, like that, these are really good questions for a CPA.
yeah. You'd be surprised. We've had to deal with a CPA that just wasn't on top of things and that was late getting, that can be just so aggravating having a CPA that doesn't
Yeah.
respond, that doesn't communicate, that doesn't answer the phone, doesn't return phone calls. Like this, you shouldn't have to put up with that too long.
Yeah, we're on
And
our
then,
second CPA right now, but he's pretty good
yeah,
though. Yeah.
we're
But
about to go to our fourth or fifth here pretty soon. So, real estate attorneys, do you absolutely need one? Maybe.
maybe.
It's probably not a good idea to have one ready to go. Somebody that you can consult with.
Well, you said it
Um,
probably is a good idea. Yes, it is a good idea
that's
to
what
have
I,
one just, yeah,
if that's
for
not what
sure.
I said, that's what I meant to say.
Yeah.
It's a good idea to have one ready to go.
Yes.
Um, and then you can ask them this question, Clarissa, should each property have its own LLC? My attorney told me consider a series LLC. By the way, with attorneys, there's not just real estate attorneys, but there's also like contract attorneys. There's different types of attorneys that special. Some just focus on probate. Some focus on like I have a contracts attorney that I use. She files all my LLCs and draws up all my
Yeah.
contracts and my paperwork. I hope to have her on the show. She's amazing. Um, can I use land trust for privacy?
Hmm.
So I've asked different attorneys about land trusts. They have different answers for this. I will say that. Some attorneys won't do a trust unless the value of the trust is like X million dollars.
Yeah.
Some don't. Some will do a trust at, $250,000. So it just depends. How do I protect myself when partnering? That's a big one. So talking about partnerships,
Yeah,
I've
can
been
definitely
I
help you
yeah.
draft those contracts, like for a partnership or JV agreement, because they, especially if they have experience here, right? Because they're gonna think of a lot of things that you're not gonna think about. What if
Hmm.
your partner dies?
Yeah.
Or what if your partner gets a divorce?
Right.
Like I mean, some of those things you don't really think about, like when you're just kind of like, oh, awesome, we're gonna partner,
Oh yeah.
we've got a deal. You're not thinking about all those things that could kind of go wrong or sideways, but a good real estate attorney is going to help you address those things up front.
Yeah.
You want everything on paper, especially when working with partners. So then that way, I'm not the bad guy. Let's refer back to the
Yeah.
partnership agreement that we both
Yeah.
signed, right?
That's
So,
good.
yeah,
Also, partnerships can really affect your 1031 plans because you can't just if you're a 50% owner in an apartment complex, you
mhm,
can't just move that money into a new project without those
right.
partners if you're in an
Yeah,
LLC. Can you review contracts before I make offers? They should tell you yes. They're going to charge you
yeah,
a fee for that. I would include in this questions, which contracts should I have you review? Because I think
mm,
that this is me not being an attorney, not being a CPA, but just being a guy in the industry. Um, I think there are a lot of situations where people don't use an attorney to review contracts, and they should. And I think there's a lot of people that think they should when it's not necessary, and just knowing
right.
when is it necessary to spend money. You know, if you're someone who's going to use your agent to write five offers a week on five properties, it's probably not practical to have your attorney review those, especially if you're in a market similar to 21 or 22 when properties are selling incredibly fast. You got to move fast. Sometimes it's not practical.
Yeah,
Attorneys get paid by the hour. They're going to go at their own speed. Um, so it's something to
yeah.
think about.
Cool. I think we got to wrap it up.
Okay, it is 1:17. We would love your feedback on this. I know it's a lot. We want to go into more detail about a lot of these topics because we
If you
want
want to
to
just
help.
comment, maybe
Yeah.
comment on the video when it gets uploaded on YouTube, make some comments there if there's anything that people want us to kind of deep dive into. Spend a little
Yes.
bit more than just a few minutes on each subject. Maybe we spend the whole 45 on one particular thing, or we can bring in some professionals, like CPAs, attorneys, things like that, if people have enough questions, they want to talk about a specific topic.
Yeah, maybe we can interview your new CPA.
Yeah. No, he's good. He's really good.
Cool, cool. All right, Albert. Appreciate it, brother.
Awesome, man.
Happy Monday. Thanks, Rick. Thank you, sir. Thank you, Richard. I think I saw Mike
Yeah.
on here. A lot of good people. Be blessed. Bye.
All right. Bye.